Good morning and welcome to Stock Market Today. It's Tuesday, September 24th, 2019, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to ChaikinAnalytics.com/today. Sign up for a free email where you can follow along with this show, as well as get daily stock ideas for you to consider. Hits your inbox every trading day before the market opens. So U.S. equities were mixed in Monday's trading, finishing off the best levels of the day. Treasuries rallied across the curve, continuing last week's strength. The dollar was weaker versus the yen, but stronger on the euro cross. Gold finished up 1.1%. And crude settled up 90 basis points on the day. As we get to the desk this morning, futures are up 30 basis points for the S&P 500 to start the day. Asian markets were mostly higher overnight, and European markets are also trading higher. Treasuries are weaker with some curve flattening. The dollar is stronger versus the yen, but weaker against the euro. Gold is down 30 basis points, and WTI crude is taking back those 90 basis points to start trading on a Tuesday. S&P 500 continues to fade from resistance. That resistance area remains between 3,000 and the July highs at around 3,030. Support comes into play 2,900 to 2,950. RSI beginning to roll over here as it tests the rising trend line, and we want to see it hold in bullish ranges on any tests of support by the index. To me, that's the key that we're looking for. Can the market hold bullish ranges while it holds support? If that's the case, it increases the odds that that support zone between 2,900 and 2,950 is likely to hold, setting the stage for the next leg higher for equities broadly. Now, one bullish point is that Chaikin money flow remains bullish, as it has been since July, and continues to be bullish even as the market chops around through August and now fades from resistance here in September. So the game plan is pretty simple. Pullbacks to support that hold within bullish ranges on the RSI set the stage to get aggressive in the leading areas of the market. Look for bullish and very bullish stocks that have become oversold within those leading areas of the market. That's the game plan. That's the one we're sticking to for now. Want to highlight the fact, though, that if 2,900 does break to the downside, the stage is set for a test of the lows of the August range and the 200-day moving average. What are we writing about today in our note to Chaikin Analytics clients? Well, we're talking about the fact that the defensive sectors led during yesterday's mixed equity session and are starting to rebound a little bit from a trend perspective as well. Utilities rally from relative support. That's a key point in our note today. We looked at utilities yesterday. We'll look at real estate a little bit later in the show. Technology is testing a key relative breakout level, and I think that that's important. Dividend stocks appear poised to outperform further. We'll take a look at a fund there and a name that I like in particular. Futures do point to a higher open, as we said, trading about 30 basis points to the good here to start the day this morning. Now, our major indices from a power bar perspective, I did see a little bit of deterioration yesterday. Dow remains bearish, 3 bulls to 4 bears after adding 60 basis points. S&P 500 relatively flat yesterday, 119 bulls, 82 bears. NASDAQ up 4 basis points, 18 bulls, 19 bears. So really a mixed gauge here. Small caps underperformed, down 6 basis points on the day, 642 to 300. The bulls to bears. Bonds were relatively flat. According to the Chaikin Power Bar, small cap stocks and large cap stocks are bullish, but the major markets across the board are mixed. Let's look at our stock of the day now. Corvo, ticker symbol QRVO, closed at 77.36, up 1.82% yesterday. Some nice outperformance on the day yesterday. Corvo has a very bullish rating at Chaikin Analytics due to very attractive financial metrics, very strong earnings performance, and positive expert activity. Stock does have some weak price volume activity as it chops around here. Really hasn't gone anywhere in a year. But let's look at the chart. Very bullish stock, strong trend, strong industry group, type of name we want to consider owning. Let's look at the market and model. Are they in agreement? Yes, they are. That very bullish rating being met with outperformance relative to the SPY. So market and model are in gear, but the stock is not oversold. It's rounding out of an overbought condition. We want bullish and very bullish stocks in leading parts of the market that are outperforming the market when they're oversold. And in particular, we'd love to see them have bullish money flow. And money flow for Corvo has been choppy of late. Now, the stock is trading up here near the top end of this trading range that's marked trading for the past year, with lows in the $55 to $60 area and highs up here around the $80 mark. So trading closer to resistance than support, above a rising long-term trend line. Stock is not oversold. I think we want to add Corvo to a bullish watch list. Keep an eye on it. Should we start to see an improvement in money flow that coincides with an oversold reading? That would be the ideal setup, especially if the stock holds above this near-term support level at $75. Keep an eye on Corvo. Add it to a bullish watch list, but I'm not there yet to take action on the stock right away. I like them when they're oversold, folks. It sets up a higher probability entry point. Let's look at our sector tracker now. The movement of the major sectors over the last 5 days, and quite the reverse, right? When we were having these conversations last week, these defensive sectors were towards the bottom of the list as we were starting to see some rotation, maybe some profit taking out of the leading areas of the market and into the lagging parts of the market. But that has now reversed over the past 5 trading days. We could see a very defensive feel at the top of the list. Utilities, real estate, healthcare, and staples are all traditionally defensive sectors of the market. Utilities and REITs also backing up to the latest move lower in Treasury yields, right? The 10-year after that sharp spike over the previous couple of weeks has now started to move lower again. That's lent a bid to the bond proxies in the equity markets, in particular utilities and real estate. We're going to take a look at a dividend fund a little bit later in the show. Middle of the road, tech, discretionary, and financials. And to the extent that rates continue to move lower, we would expect financials to continue to see a headwind on a relative basis. Comms, industrials, and energy at the bottom of the list. Interesting to note that after the sharp spike in oil and a valiant attempt on the part of energy to reverse its relative trend, it has now resumed its trend of underperformance. Continues to be the weakest area of the market from a power bar perspective, as well, as you'll see when you read my note today. Now, our industry in focus is innovative tech services. It's a hodgepodge of innovative technology names, and it's been an underperformer over the past 6 months. It's underperformed the S&P 500 by 6.5%. The power bar ratio hints at further weakness to come. Remember, the power bar ratio measures future potential, and it's weak here. 35 bearish or very bearish stocks, only 18 bullish or very bullish stocks, has moved up 1 slot over the past week to get to number 17 of 21 subsectors that we track, but certainly towards the bottom of the list. Some of the indicative stocks there, CarGurus has a very bearish rating, Lending Tree, TREE has a very bearish rating, and ticker symbol IQ, it's an ADR, also with a very bearish rating at Shaken Analytics. These are names you want to avoid. These are names you want to potentially look for bearish opportunities via the options market if you do trade to that side of the book when the opportunity presents itself. And let's take a look here. Here's XITK, the ETF that tracks this group, right? It has a neutral Shaken Power Gauge ETF rating, and the trend is weak as the fund trades below the long-term trend line. And notice that it's still in the consolidation that began in August, right? S&P 500 is up and out of the consolidation, now testing its highs. This group, the same cannot be said, right? At the same time, you can see here, begins to underperform in August. So when the market was weak, this group underperformed, rating turned neutral. Fund is oversold with some bullish money flow. So maybe potential there, but right now too early to say, right? This is certainly would not constitute a leading area of the market. Remember last week in our note, we talked about software, right? This chart looks very similar to the software ETF, not breaking out of the range, not testing the highs. Certainly some rotation in leadership in and around the technology space, right? Some profit taking in software. Money's gravitating. It has gravitated towards the semiconductors over the past couple of weeks to a month. Just something to be aware of, right? Always take the analysis under the surface and see what's really going on. The index level and sometimes the sector level just don't give you enough information. Let's take a look at what's trending now. Yesterday's S&P 500 movers and shakers, our gainers and losers. Ulta up 3 3/4% as retail names caught a lift. Some positive comments from an analyst on AAP after spending some time with management sent that stock higher by 3.55%. CenturyLink 3.2% to the good. We're going to take a look at that one later in the show. It's actually my highlighted stock in my note today. FLR, some strategic review results, stock higher by 2.75%. And Equinix is a name that we've liked a lot for a while, up 2.7%, does still have a very bullish Chaikin power gauge rating. Loser side of the board, what the market gives, it takes away. INSEE moves from the top of the leaderboard to the top of the loser board. No real news there. Maybe just be some profit taking after a strong move. Stock down 4.4% yesterday. Take-Two, some soft numbers on one of their games, down 3.7%. Abiomed, patent ruling in Germany sends that stock lower by 3.5%. CAG, no real news there. Stock down a little over 3% on the day. And some headlines around opioids sends McKesson lower by 2.6%, as well as weighing on other groups leveraged to that theme. So let's take a look at the charts now. Let's dive right in. This is a chart I'm watching closely. This is tech relative to the SPY, right? So tech sector relative to the S&P 500. And you can see that tech has been an outperformer over the course of the past 2 years. Nice uptrend above the 200-day moving average. So the trend's still very much intact, and this is a consolidation. But we're now testing this key breakout level, right, while momentum starts to wane a bit. Look at the RSI, a series of lower highs in the RSI for this ratio. Now, it's holding middle of the range, so very much confirming the consolidation. But should momentum continue to weaken, it increases the odds that this support level will give way. Now, technology is the largest area of the S&P 500. It's over 20% of the index. So we really want to see technology doing well to remain bullish on the equity market. So this is a chart that we have been and will continue to watch closely. Now, the absolute trend paints a similar picture here. Consolidation within the context of the uptrend that's been in place since late 2018, early 2019. We'll see if this uptrend holds and the stock and the fund can start to gain some footing. We really do want to see tech begin to outperform. But at the same time, there is that rotation under the surface within technology that we've been talking about. So really going to have to start to be selective with exposures within the technology space. Defensive sectors are starting to reassert leadership. Right, we looked at utilities yesterday, talked about how the absolute trend looked good, and the group was starting to rebound from relative support. Let's take a look at real estate now, right? Another bond play, or a bond proxy play rather, within the equity market. XLRE relative to the S&P 500. Pullback test support and sets the stage for the bounce that we are now seeing, especially if yields move lower. Above a rising 200-day moving average. Notice the RSI here for the relationship, for the ratio, has not become oversold and is now moving back above the 50 line. To the extent that yields continue to move lower, we would expect real estate to continue to outperform, building off this test and hold of support, building off of this rising 200-day moving average, and we would expect to see momentum move in the right direction. Now, on an absolute basis, XLRE in a nice steady uptrend, slight consolidation within the context of that trend, especially when yields backed up, and now beginning to move higher once again as yields have come in. So defensive sectors are the areas of the market that are starting to reassert their leadership. Remember what we looked at just a little while ago. The groups over the past 5 days, very defensive in nature: Utes, REITs, healthcare, and staples. Now, new leadership in the dividend space. We've been talking a lot about dividend stocks over the past couple of weeks. We've been highlighting DGRO, and now we're looking at DTD, the Wisdom Tree Total Dividend Fund. Check out this fund. Testing its highs, right, above the rising 200-day moving average, above a rising near-term trend line. RSI, after a series of higher lows and failing to become oversold on this move lower, now shifting back into bullish ranges. So momentum confirming the strength that we're seeing on an absolute basis in DTD, and that's also now coinciding with the fund breaking a downtrend line relative to the SPY. So emerging leadership among the dividend stocks within the market, something to keep an eye on. You want to maybe drill down on the holdings of a fund like DTD and find a name like CenturyLink. Bullish stock, strong trend, strong industry group. Market and model are in agreement here as that bullish rating is met with outperformance. Stock is becoming oversold with bullish money flow and triggered one of our proprietary buy signals today. This one, the money flow buy signal. Mark Chaikin has featured this stock recently. I'm featuring the stock today. CenturyLink looks compelling as a stock that's starting to make the turn. That's going to wrap it up. You can check out my survival guide. I will be back here tomorrow. Have a great day.